Morning, everyone. Hoping you're having a great day. It's Grow with Joe here to give you more lessons on how to grow your money or grow yourself personally. Today, we're going to discuss a personal finance tip. But it's Tuesday here in Praia still. Plan is to go to Cali, Colombia next week for a week, and then I'll go to Manizales. Just trying to see more of Colombia before I have to leave. My visa is supposed to is expiring in December, so I got to make sure, like, hey, time to see this country before I have to leave. Goal is to come back next year and everything. But yeah, just one of the benefits of working for yourself, working online, is you can work anywhere you want to. Internet is amazing. You can do these Facebook Lives without really needing to be in a special office. You just need a webcam, good internet. Internet is not always the best here in Colombia, but it is what it is, and I'm just making the best of it. I went to Parque Cafe on Sunday, which is a coffee farm at a theme park, so that was pretty cool. Um, but I'm about to go to Valle de Cocora, which is on this Sunday, and I think there's supposed to be like a lot of like hummingbirds and everything. I saw a couple hummingbirds at the Parque de Cafe, but I think there's supposed to be even more at Valle de Cocora. So we'll see how that goes. But going into today's lesson is about life insurance and what types of life insurance are out there and everything. I don't sell life insurance. I'm just a fee-for-service financial advisor. So basically that means people pay me a fee to give them advice on what is the best option for them. I used to be in the commission role where, like, hey, I would do this financial planning, but my goal was then to sell you a life insurance product or a disability insurance product or annuity and everything. But I didn't really like that industry. I feel like this is more like being the fee for service is a way I can act more as a fiduciary for my clients and everything. But kind of glad I went down that path so that I have more knowledge and I understand what the different types of a life insurance are, so that I can help my clients make the best decision possible, so they are not put into a position where it's not going to maximize their benefits. So if you have any questions about life insurance, just leave a comment. I can answer it afterwards, or you can set up a message. But the first type of life insurance there is whole life insurance, and there's 4 different types. So whole life insurance is the most conservative life insurance that you can get. It's going to have the highest premium, and is typically going to have the lowest death benefit for that premium. But the key thing with whole life insurance, it's like most conservative, so it's typically going to grow about 4.5%. The way life insurance works is they take your age and they calculate it to a certain date. So it could be, most of them is at age 100. So you're going to pay your premiums from the time you're 22, say, or 30, and then you pay that premium until you're 100 years old. That's how whole life insurance works. That's most of them. Some of them, they could be like, hey, we want to stop at age 60 or 65, but if that's the case, your premium is going to be a lot higher to get that death benefit. Last numbers I checked were about 4.5%. That's the rate that that death benefit is growing by. So assuming and it's also based on your health. So the healthier you are, the lower your premium is going to be. That's because the underwriters assumes you're going to live a pretty long life. If you have health conditions, then that typically means you're going to have a higher premium, especially smokers are going to have higher premiums. But whole life insurance is the most conservative. It also has like a guaranteed cash value inside of it. So saying, hey, at age 10, this is what the cash value is at 20 and everything. Another benefit of whole life is the reduced paid off, saying, hey, I don't want to pay my premium anymore, say at 20 years, instead of having, let's say, $100,000 death benefit, I'm going to have $40,000 in death benefit. I never have to pay a premium again. So the key, and then also they have these options to purchase additional insurance. So if you become uninsurable, then you can get these options to purchase additional insurance. That's typically only with whole life insurance. The other type of insurance is a universal index life insurance policy. So basically when you pay your premium, part of that premium is going to go to the insurance, and the other part of that insurance is going to go into a cash fund. And so that cash fund is then going to be invested into whatever you choose. It could be the S&P 500, it could be the total market, it could be whatever you choose, and you can change it up and everything. But the idea is like that cash value, what you're investing will help you like grow your cash value. So the cash value is not guaranteed. It's based on what the market does and where you invest your money and everything. But the premium is going to be lower because it's the cash value inside is not guaranteed by the company, while a whole life is. There are reduced paid up options. You just have to work with the agent to see what is the best option for you. And they could also have a rider for long-term care or chronic rider. So it's not as good as long-term care. And there's certain conditions that have to be met for you to get that chronic rider to pay for long-term care needs and everything. And the third type of insurance is universal life. So this is just basically a death benefit. There's some cash value that can build up, but basically you're paying for the cash value. You're just paying for the death benefit. That's what you want. And there's different types of universal index life and universal life. It's with the premiums, there's guaranteed and non-guaranteed. So a non-guaranteed is going to have a lower premium, but the death benefit is not guaranteed. So you might get a letter from the insurance company like, hey, your premiums are increasing. You have to pay or you're going to lose that death benefit. So just be wary of that. Are you getting a guaranteed policy or a non-guaranteed policy? And yeah, people have been not aware of what they had, and it can cause them problems. It caused problems down the road because they weren't prepared to pay an extra premiums for their life insurance, but that's what it was written in the contract. But agents don't always tell people everything about what's going on with the policy. So it's going to have the lowest premium, but you're not going to really have any cash value. It's just strictly death benefit and everything. So those first three: whole life, universal index life, and there's also variable universal life, which has the ability to grow faster. It's very similar to a universal index life, but the cash value is different. I won't go into it. It's kind of complicated. And universal life, those are basically permanent policies. You kind of want that to have that policy throughout your entire lifetime. The fourth type of life insurance is term life insurance. So term life insurance is basically you're trying to rent a policy and you just need it for a certain period of time. So there's 30 years, 20 years, 10 years, 15 years, whatever. And with all life insurance policies, you can cancel them any time and anything. So like, let's say you get a 30-year term policy. You don't need to keep it for 30 years. You can cancel it anytime you want. But it's just saying, hey, we're guaranteeing this rate. So if you get $1 million and it's costing $100 a month, let's just say these rates could be changed based on health and everything and the type of company. But you're saying, hey, as long as you pay us $100, we'll give you $1 million worth of coverage for the next 30 years. Once that 30 years is up, the premium is going to go way up. So it can go from like $100 to like $400 a month or something like that after that 30-year term period is up. Because the life insurance company is not expecting to pay out these life insurance policies. Only like 1% to 3% of term policies are actually paid out. So it's just like, hey, I'm using this as insurance, and all insurance is to help protect against risk, and the risk is like survivors, your family, from not having that financial hardship and everything. So some people like buy the term and then they try and invest the rest so that they can self-insure themselves, but that requires discipline and everything. So yeah, you just got to understand the deal before you accept the deal. Realize, I would say don't make, if someone is selling you this as an investment, there are opportunities, but like those typically require you to max out your Roth IRA, max out your 401k, and then look at your situation and everything to see what is the best for you in terms of to get tax-free income. Definitely not for someone who's just starting. It's pretty, those type of strategies are used for people who are more advanced and have assets, have a lot of assets or a pretty good cash flow and everything. So it depends. So don't know the deal before you accept the deal. Know your alternatives and everything before someone says this is investment. In terms of like what I do, like just have your plan. Just realize like, hey, this is what I want to protect and everything. This is what I'm preparing for, and just realize that, hey, it's just understand the deal before you accept the deal. Realize what you're getting into, what the alternatives, and that's why I created this video, because I want you to know there's 4 different types out there. So if you go to one insurance agent or financial planner that's a commission, a broker dealer and sells insurance products, just realize like, hey, is this the best deal for me? Am I hearing all 4 or am I only hearing 1? And if you're only hearing 1, that basically means that person that's trying to sell you that thing is going to make the most money off of that thing. Or they might show you, but they might give you really good information about one thing and not so good information about the other. And what the other alternatives are. But just, yeah, realize, understand the deal before you accept the deal. Hopefully you can trust the person that's helping you out. Life insurance is part of a plan. Like if you're 30 years old as a couple, and you have 2 kids and one of the spouses passes away, that can create a big financial hardship. So you might be like, hey, do I want to do permanent? Do I want to do all term? Or do I want to do a mixture of the both? You just have to realize like, hey, what is the deal before I accept the deal? That's always my goal in life, is to understand what am I doing before I really go into this thing. Do I really know what are my benefits? What are my threats, opportunities, and everything? Can I stick to this plan and everything? And the key thing with life insurance is you kind of have to pay this thing for a really long time. We're talking like whole life insurance, and you have to pay these things if you want to have that full benefit until you're 100 years old. Like some of them you can stop at 60 and whatever, but instead of getting that full amount, you're getting a reduced amount. It all depends. But the idea is, hopefully, my idea is just like know what you're getting yourself into. I definitely seen a lot of people not know what they're getting into, and it causes problems on the road and causes upset feelings and everything. And I don't know, like it takes time to go over these things as well. Like it could take like 5 hours going over all your options and going over the situation and everything. And when it comes to like a life insurance agent, what their goal is like, hey, I'm trying to sell this thing as fast as possible because I only get paid when you buy this product. So I'm just going to show you this one, and hopefully you buy it. So those are my things to help you look out for. Hopefully, if you get into a situation where you're like, hey, what do you want to do? This is what you should do. If you want to talk to a professional like myself, I'm a fee-for-service, so there's no conflict of interest in terms of the advice that I give. I don't get compensated by life insurance firms or from financial services firms. I just basically get paid by the advice I give from my clients. So if you're interested in getting a consultation, discovery call, talk about things like, hey, what is my tax plan? What is my survivorship plan? What is my liability plan, estate plan? What's my investment plan? You can just go to growwithjoe.me/start here. And you can schedule a discovery call right there and everything. Or you could just send me an email at info@growwithjoe.me, and you could get started there as well. So hopefully you enjoyed today's lesson, and hopefully it helps you make better decisions with your life. A lot of this takes action. So if you want to improve your financial situation, take some action. And a coach can be a great way to help give you that accountability. So hope you enjoyed today's lesson. And remember, if you go with Joe, you can grow with Joe, because Joe knows Joe. All right, take care. And I'll see you tomorrow with a personal development lesson. All right, take care.